Hey guys, how are you? I hope all of you are doing really good. So, welcome to another session of Economics for Finance Excellency Batch. I'm your friend, your mentor, CS Saurav Jindal, welcoming you all to the new chapter of Excellency Batch. The new chapter is chapter number 12, that is Trade Negotiations. So, we are just left with three chapters 12, 13, 14, Trade Negotiations, then Exchange Rate is there, then Capital Movements is there. After that, complete, sir. Done and dusted the batch, and we are on time for the completion. Don't worry. Okay, so what about the trade negotiations? Now, what this chapter is all about? This chapter says that how the different countries who want to engage in the international trade, they meet, they negotiate, they discuss the terms, they set the terms that what should be the tariffs, what should be the rates, how the import should be there, how the export should be there. So this is all about the trade negotiations. Is there a common body who is governing all these international trades? We are going to study about that also, right? How the different negotiations are done, the different rounds of talks are there between the different countries when they want to engage in the international term, right? Because see, what is the reason of meeting and engaging into the terms? Every country wants that they should get benefited, right? So everyone wants that the trade should be conducted which is going to benefit their economy. That is why they negotiate, they sit, they negotiate, and they decide the terms, right? That how the international trade is to be conducted. Okay, so let's start with very easy chapter, very easy, nothing as such in this difficult in this chapter, very easy. So what is trade negotiation? He says the trade negotiation is a process in which the nations meet to discuss the possibility of trade, that whether the trade can be done between those countries or not, with the goal of reaching a trade agreement which is beneficial for both the countries, right? Which is not for just one country, which is beneficial for both the countries. They want to agree on such terms. Both nations are interested in negotiating a successful trade agreement because it has the potential of promoting the economic growth. That is what I told you, that they want that there should be a successful agreement which will help in the economic growth of both the countries and allowing the companies to expand their markets, right? The trade negotiations may involve more than two nations also. Yes, there can be more than two nations at one time involved, right? We'll study about these regional trade agreements where you will see that there is a block of country, right? There are more than two countries which are involved in the talks because all of them want that the common terms should be set for each and every country, right? So this is how the trade negotiations may involve more than two nations also. The next is the regional trade agreements. Regional trade agreements is the agreements between a group of countries regarding, it may be regarding the tariffs, it may be regarding the other import export terms. So RTAs are defined as the grouping of countries which are formed to reduce the trade barriers between the member countries, right? So let's say four countries make one group: country A, country B, country C, country D. So these four countries make a group of themselves, right? And between themselves, they decide that if they trade between themselves, there will be no trade barriers. There will be no or less trade barriers. Clear? Because they want the friendly trade. Everyone says that our economy should be growing. So they say there will be either no trade barriers or there will be very less trade barriers. There will be very less tariffs on that. So this grouping, if they agree on this thing, these four countries agree on this thing, then this becomes the regional trade agreements, right? The countries in the RTA need not necessarily belong to the same geographical region. It is not necessary that all these countries in the RTA should belong to the European region, all these belong to the Asian region, all these belong to the African region. No, there can be one country from the Asian region, one can be from the European region, one can be from the African region. So it is not necessary that in the RTAs, the countries need to be from the same geographical region. No, it is not necessary. The trade liberalization under the RTA applies only to the member countries of the RTA, that whatever the trade liberalization terms that they decide. What is trade liberalization? That making the trade easy, right? Liberalization means making the things easy. So trade liberalization means whatever the terms, whatever the agreements they do to make the trade easy, those will be applicable only to the members of the RTA. right? If there is country E which is sitting here outside the member, whatever the terms these four decide, it will not be applicable to country E. That is what he is saying here. So the regional trade agreements means a group of countries who come together and decide how the international trade between them should be conducted, so that there should be minimal trade barriers, right? And every economy is able to grow. So types of RTA. Now, what are the different types of RTA? That is how the different types of agreements are being done between the countries. Unilateral trade agreement. Unilateral trade agreement. Importing country provides the incentives which encourage the exporting country to engage in economic activities that improve the exporting country's economy. So this is a one-way traffic basically, that the importing country, what the importing country is doing, importing country is providing the incentives to the exporting country. Let's say there is a small developing country, right? Let's say there is a developed country. On one side, there is a developed country, and on the other side, there is a small developing country whose economy is going at a very slow pace. Small developing country. Now, this developed country is an importer, right? And this small developing country is an exporter. Right? So what this importer will say? Importer will say, okay, you export the goods to us and we will provide incentives on those goods, right? We will encourage your export. So this is one way. This is one way, right? They are just providing the goods, they are providing, and the main incentives are being provided by the importing country, so that the exporting country can also grow, their economy can also grow, right? Generalized system of preferences, that from this country we prefer to buy the goods. Clear? Next is bilateral agreements, where it is a two-way agreement. In the unilateral, there was just a one-way agreement. The importing country was providing the incentives, right? In the bilateral agreement, there will be a two-way agreement, that the agreements which set the rules of trade between the two countries, two blocks, or a block and a country. Block is again, I can say the members area, right? Like the Asian-Indian relation. So Asian is what? This is one block. Now, block normally is contains the countries of a specific region, right? Like this Asian is what? This is Association of Southeast Nations, right? This is Association of Southeast Nations, and India is one country. So Asian is a block. Block is again a grouping of countries, but they belong to one geographical region, right? That is what is known as block. So it can be between the two blocks, or it can be between a block and a country, right? So it is Association of Southeast Nations. So this is the bilateral agreement if there is a two-way agreement, right? The Asian country says we'll provide the incentives to India. India says we'll provide the incentives or preferences to the Asian nations. After that, the regional preferential trade agreement, the agreements among the group of countries to reduce the trade barriers on the reciprocal and preferential basis only for the group members, right? So whoever is the group of that regional trade agreement, they say we will reduce the trade barriers, and at the same time we will give the preferences also in terms of I can buy a product from country A and country B. Country A is a part of RTA, so they say we will give you the preference, right? So preferential basis, on the preferential basis we'll give you the benefits, but only to the group members of the RTA, right? For example, the GSTP among the developing nations. What is GSTP, sir? What is the full form of GSTP? It is the global system. It is the global system of trade preferences. Global system of trade preferences, right? So this is the regional preferential trade agreement. Now, next is the trading bloc. Trading bloc is again a group of countries have the free trade agreement between themselves. Now, whoever is the member of that bloc, they will say there will be a free trade agreement, right, between themselves, and may apply the common external tariff to other countries. It is may apply. For the other external countries, they may apply a common external tariff. That if there are four countries, if there are three countries, let's say country A, country B, and country C, this is one block, right? They can enter into a RTA, that is a regional trade agreement. Now they among themselves there will be the free trade agreement, FTA, free trade agreement. Now there is country D. Now there is a possibility that country A will say, country B will say, and country C will say we will charge the same rate of tariff. That is, if it is 10%, 10%, 10%. But it is not necessary that it will happen. It may or it may not. Why I am focusing on may or may not? Because in the further points we'll discuss where there is 100% chance, right? So let's see. So this is the trading block. For example, the EFTA. EFTA is European Free Trade Agreement. It is the European Free Trade Agreement. Now, in this European Free Trade Agreement, see, that is why it is known as trading bloc, because in this all the European countries are involved, right? So there is only one side of a bloc that is involved. So in RTA, when we say the countries need not necessarily belong to, but they can belong to. It doesn't mean that RTAs have to be between the countries of the different geographical location. No. But at the same time, it doesn't mean that they have to belong to the same geographical location, right? It can be or it cannot be. And when we use bloc, the bloc normally consists of the nations of the one geographical region, like the European bloc is there, the American bloc is there, the Asian bloc is there. So this is how it is done, right? So trading bloc says the free trade agreement between themselves and may apply a common external tariff to other countries, right? After that, it is the free trade area. Now, what is the free trade area, sir? The group of countries eliminate all tariff barriers for each other. That means a free trade agreement between themselves and retain independence in determining the tariffs for the non-members. So what is the difference from here? The difference from this example is there will be a free trade agreement between themselves, but while charging the rate from the non-member countries, that is this country D, they will say we will decide individually. We are not going to charge a common rate, right? We will decide individually. Clear? In the first case, in case of trading bloc, it may or may not. In the free trade area, they say we will retain independence. We are not going to charge a single rate. We will charge whatever we wish to from the non-members, no interference from the other members of the RTA, right? We retain independence in this case. For example, the NAFTA. NAFTA is the North America Free Trade Agreement. This is North America FTA Free Trade Agreement, right? This is NAFTA. So after that, it is customs union. What is customs union? The group of countries eliminate all the tariffs among themselves, but maintain a common external tariff for countries outside a union, violation of MFN clause. Now what they say? They say again, in the customs union, a group of countries come together, they remove all the barriers among themselves. That is the free trade agreement, and maintain a common external tariff for countries. Now in this case, it is not may or may not. It is like they will maintain a common tariff for the countries outside the union. That is the difference here between the trading bloc, the free trade area, and the customs union. In the trading bloc, they may or may not. In the free trade area, they retain the independence that we will not go for the common rate. In the customs union, they have to maintain the common rate. It is not a may or may not, right? So why it is a violation of MFN clause? Why it is a violation of MFN clause? If you remember, in the case of MFN clause, I told you that if WTO has, let's say, 5 countries, right? A, B, C, D, and E. Now these 3 countries make a customs union, right? And they say there is a FTA between them. Okay. Now they say that they will charge from D and E a separate rate, right? Let's say 10%. Now MFN says there should not be a discrimination. If one country is charging something from another, all the countries should be charging one thing from each other, right? That is the MFN clause, that you cannot charge different rates to the different members of the WTO. That is why it is written as violation of MFN clause. Example is Mercosur, the South American common market found by Argentina, Brazil, Paraguay, and Uruguay, right? After that, it is common market. The common market goes beyond the customs union by allowing the free flow of the factors of production. He says in the common market, they say it is not only the final goods that we are going to trade, even the factors of production we can trade, in addition to the free flow of the output. Member countries also try to harmonize some of their institution arrangements as well as the commercial and financial laws. For example, this Asian is there, right? Association of Southeast Asian Nations. So this is what they say, that it is not only the final output that there will be no trade barriers on that, even on the factors of production. If the labor capital wants to move from one place to another, even then there is no restriction. And for that, these countries try to change their institutional arrangements also, right? Like the banking system, they can change, they can set up their bank in another country's bank they can allow to set up in their country, so that there is easy flow of income, there is easy flow. If there is a factors of production, if there is a labor who wants to go from one place to another, right, so that it becomes really easy for that labor also to get the income and all that things, right? And they can tweak their commercial and financial laws also, right, according to what is suitable to all the nations in that particular RTA. Then is the economic and the monetary union. The members share the common currency and the macroeconomic policies. For example, the European Union. So in the European Union, all the members are sharing the common currency and the broad economic policies remain the same. Then is the political union. The political union implies more formal political links between the countries. A limited form of political union may exist where two or more countries share the common decision-making bodies and have the common policy. So if two or more countries are having the same body who is making the political decisions, in that case it becomes a political union, right? So these are the different types of the regional trade agreements that you have to go through, understand and remember, right? Unilateral trade agreement, bilateral, regional preferential trade agreement, then trading bloc is there, free trade area is there, customs union is there, common market is there, economic and monetary union is there, and the political union is there, right? Then the next is the general agreement on tariff and trade, that is the GATT. Now this GATT is a multilateral trade agreement created in January 1948 to achieve a broad multilateral and free worldwide system of trading. So the different countries decided that there should be a proper system, proper rules which are defined for international trade. For that, this concept of GATT was introduced, right? So this was the agreement done between the countries that how the worldwide trade should be conducted, how it should be conducted in a smoother way. There should be rules and regulations. So GATT provides the rules of international trade from 1948 to 1994. Sir, what about after 1994? In 1994, the GATT was replaced by WTO, that is the World Trade Organization, right? So it was replaced by that. Why it was replaced, we'll study that, right? So GATT governed the international trade working along with the World Bank and the International Monetary Fund. So what was the need for the GATT, sir? In case, one thing is for the smoother international trade between the countries. In case of any discrepancy in the international trade, the GATT rules can be referred to. In case there is some I can say, what you can say, when the two nations are not on the same terms, right, then they can also refer to the GATT, right? So what are the principle? That the member countries will consult each other concerning the trade problems, right? And if there is a problem that arises between the two countries, the GATT rules will decide what is right and what is wrong. So GATT provides a framework for negotiation, that you have to negotiate. If you want to negotiate something, you can negotiate between this framework only, and embodies the results of negotiations in the legal environment, that whether whatever the terms have been negotiated, whether legally those are okay or not, whether legally those are applicable or not, all these is defined by the GATT, right? The trade should be conducted on a non-discriminatory basis, that there should be no discrimination between the different nations when it comes to international trade, right? Every country has the equal right, every country has the right to economic growth. So the international trade should be conducted in such a way that it benefits all the countries. It is not on the discriminatory basis, right? So this was the principles. Now, what are the objectives? To provide equal opportunities to all countries in the international market for trading purposes. That is what we told you. That is why we say it should be non-discriminatory, that in the international market, every country should get the opportunity to sell their products, to buy the products from the international market and all those things, right? Then he says to increase the effective global demand. If every country can sell the goods in the international market, people will have more opportunities, they will demand more, there will be more products to be selected from, to ensure a better living standard in the world as a whole, right? As a whole, we can increase the living standards if we give access to the larger markets, to larger international markets. The countries can involve, when all the countries get the equal opportunities of import and export, right? That is where the better standard of living, because in totality, if we see, if all the countries engage in a beneficial international trade, then all the countries can grow simultaneously. The economies of all the countries can grow simultaneously, and that is where we say the standard of living of every country can improve. To provide the amicable solution to the disputes related to the international trade. Now, this is what I was saying, that if there is any dispute between the two nations in case of international trade, now the GATT provides the solution. They will sit together, both the countries who have the disputes, they will sit together and decide what is the problem, what is the solution, right? So it is basically the framework that provides each and everything, that how the international trade is to be conducted so that it is beneficial for every country in the world. It is not about one or two countries, it governs every country in the world. It was set up in 1948 and it governed from 1948 to 1994, right? After that, 1994, the GATT was this GATT was abolished, right? And WTO came replaced it, right? Then rounds. What is the meant by rounds? Round says whenever the countries meet, they sit together to decide on the various trade terms. That is known as the round. So the multilateral negotiation process, when the countries meet and sit together for the negotiation in terms of international trade under the GATT, are called the rounds or the trade rounds, and are named after the place where such discussions started. So it is named after a place where that negotiation is taking place, where the members of the different countries will come, they will negotiate, right? For example, the Tokyo round, Uruguay round, Doha round, etc. So in all, if it is a Tokyo round, that means the talks, the negotiations are taking place in Tokyo. These rounds resulted in the substantial international trade liberalization, reduction in the barriers, etc. That whenever we sit together, we negotiate, we talk, right, and which helped in the international trade liberalization, that trade, making the trade easier, right, and removing the trade barriers. Clear? Then the loss of relevance. Now, why this GATT was abolished in 1994? The GATT lost its relevance in the mid 1980s, and the need for a new arrangement was felt due to the following reasons. It was outdated in the fast evolving complex world trade scenario. So he says, as the world was evolving very fast during the 1980s and 1990s, and this GATT was set up in 1948. So its thought process, I can say, its framework was outdated as per the latest changing world scenarios. There was a substantial expansion in the international investments. Intellectual property rights and the trade in services were not covered by the GATT. So GATT was covering only the goods, right? The IPRs were not covered. The trade in services were not covered. So there was a need that we need to widen the scope now. The international trade in the goods increased enormously and it was beyond its scope, right? So when it was established, when this framework was set, the international trade was less, but as it kept on increasing its scope, it was felt that the scope is not sufficient now to deal with the various problems the international trade might be facing due to the expansion. Ambiguities in the multilateral system could be heavily exploited when you have lots and lots of systems, when you have lots of things involved simultaneously, there might be some ambiguities left in that. The efforts at liberalizing the agriculture trade was not successful. Agriculture is one major part of the trade, right? And he says the efforts at liberalizing the agriculture were not successful by the GATT. The inadequacies in the institutional structure and the dispute settlement system, that it wasn't, because the international trade was not at a very high level during the setup of the GATT, the dispute settlement systems were not efficient with the expansion of the international trade. Inconsistency between the country's domestic rules and the GATT. So this was one another reason, that the country's domestic rules says something, GATT says something, and there was the inconsistency between these two, right? So in 1980s, when the GATT lost its relevance, there was a need that there should be new institution or the new arrangement that is required. Then the Uruguay round was held. Now, what is the importance of this Uruguay round? Listen to it very carefully. It started in Punta del Este in Uruguay in September 1986. Now, in the mid 1980s, this was the time when the GATT was, it was felt that the GATT is not that effective now. It was scheduled to be concluded by December 1990. So it was decided, it started in 1986. So it was decided that by 1990, in the next 4 years, we will conclude this round, right? It is not like you just sit one day and decide everything. No, it goes on for 3-4 years. Multiple meetings are done between the member nations, right? And after that, the decisions are taken, because it is an international trade. It is a global decision to be taken. It is not that easy that you will just meet for 1 or 2 days and take the decision. No, sir, it is not that easy, right? So it was the 8th and the most ambitious and largest ever round of multilateral trade negotiations, and 123 countries as the participant. So it was the largest meeting. The members established 15 groups to work on limiting trade restrictions in the several areas. That how to reduce the trade restriction in the several areas. Different groups were prepared for the members, right? In December 1993, it started in 86, expected to be concluded by 1990 December, but in December 1993, the round was completed after 7 years of elaborate negotiations. It was expected to be completed by December 1990, but it was completed in December 1993. Most countries signed the agreement on 15th of April 1994 and took effect on 1st of July 1995. Now, what was that agreement? That is the main important point in this. The most important outcome of this round was the replacement of GATT Secretariat with the World Trade Organization. This was the major agreement in this Uruguay round, that GATT should be replaced with another organization for the wider scope in terms of international trade, and having the better dispute settlement systems, having the better coverage, covering the trade of services also, covering the IPRs also. So after that, in 99, that is why it says signed on April 1994, took effect on 1st of July 1995. This was the World Trade Organization. This was the agreement which was done in the Uruguay round. That is why this round has been given separately, that this was an important round. The Uruguay round, it was the largest round, ambitious round, and instead of taking 4 years, it took 7 years between the countries to negotiate, to decide that GATT should be replaced now with the World Trade Organization, and that was done in 1994-1995. Clear? So this is important. See, these rounds individually can be asked in the examination. This Uruguay round can be individually asked in the examination. Normally in this chapter, the question comes from the World Trade Organization. So in the next lecture, we'll discuss about the World Trade Organization, right? The World Trade Organization will discuss about that. What is the structure of the World Trade Organization? What are the guiding principles of the WTO? Right, that on what principles this organization has been set up. Then is the overview of the WTO agreements, right? Important agreements of the WTO, just need to go through it once. That what are the various agreements of the WTO, right? Then Doha round is there, then concerns of WTO, right? So we'll try to cover it up in the next lecture. Everything we'll just try to cover it up in the next lecture quickly. If not, we'll take just one more lecture, but we'll try that in the next lecture only we are able to wrap this chapter up. right? So see you guys in the next lecture. Till then, stay safe, stay healthy, keep studying, keep sharing. Thank you so much.